Hello everyone, this is Matthew Frailey with BreakpointTrades.com, bringing you advanced technical analysis, mechanical systems, and trade ideas since 2003. This video will once again be recording my in-depth market analysis newsletter, and this is for Wednesday, September 15th. So let's go ahead and jump right into that. This is our back end. So let's go ahead and start the recording here. Click this. All right, so this is the newsletter for Wednesday, September 15th. And as you can see via the table of contents, it is divided into 5 major sections. As I stated, I am once again recording this newsletter in a video format. You can see a link right here. Newsletter divided into 5 major sections, same general theme as we always keep. I will be discussing a couple admin things here, the SPY systems and the McClellan systems, which I sent an email on today. All right. As far as the general market, just some quick notes here. Again, I'm not going to read all this. You can pause the audio or video and read at your leisure. But basically, a nice day for the market. The major indexes gained anywhere from 0.7 to 0.9%, with all 5 of the major indexes also now positive for the week, anywhere from 0.2 to 0.6%. Breadth was also positive as every single market sector we follow was up. We follow 21 market sectors. So pretty decent day. Again, it's kind of led by the big cap FANG type stocks, Microsoft especially, which by the way looks like a long here. So those are your barometers. Bonds closed mixed. TLT gave back some of its gains yesterday, while high yield corporate was up with the market. Again, as I've been stating the last several sessions, if you want a positive for the market, it's the high yield corporate market. That area is holding up very well, and the market tends to follow it. U.S. dollar down 0.2% today, and as a result, a lot of commodities were up today, especially crude oil, natural gas, which continues to be on absolute fire, uranium. All the ags had a good day. The only thing that was down were the precious metals. This week is OPEC's. Options expiration is on Friday. Yom Kippur ends tomorrow. All right. So far, the S&P has pulled back. It's still holding that 50-day moving average. We'll see what tomorrow brings. And let's go ahead and get started with the rest of the newsletter here. So first image below. Item number 2 here. This is the two of the subsystems for the SPY reversion to mean systems. There's 21 subsystems. So last Friday, this particular system, the trend pullback, took a first entry long. Okay. Since then, we've had some volatility, as you can see. Today, we had a nice up day. Now, I sent out an email the last 10 minutes or 10 minutes before the close today stating that this trade, well, I have 2 versions here. I have the original version and the aggressive exit version. So I sent out the email 10 minutes before the market closed. I said that the aggressive exit version may exit if it closed over the 9 EMA. That's this little moving average here. All right. I said I would update you on the trading community blog. Well, it looked like it was going to close over the 9 EMA, but it missed it by literally 3 points, guys. So it ended up not closing out. I confirmed that on the trading community. I also sent out an email later on. Okay, so the system, none of these systems did close out. All right, but likely tomorrow, if we're up at all, this aggressive exit version will close out. Now, what we're going to do on the website is we're going to close out half of our trade because we're going to keep the other half and wait for this system to close out, the original system. This one can hold much longer, makes more money. But what we're going to do is we're going to have a stop in place at entry, so we won't have any risk. All right, so that's my plans with this. Again, these are reversion to mean systems. If you happen to be new here, you know, if you're in an uptrend, they're buying pullbacks, as you can see. They're not trying to stay in the market. They see a trade opportunity statistically, get in, get out, you know, make that trade and sit in cash. All right. So again, if we're up tomorrow, this aggressive exit version will probably exit. So heads up. Again, it looked like it was going to exit today, but it did not. It missed literally by 3 freaking cents. All right. Again, this system went long on Friday. Like I said in my last video, quite a few of you may have missed that Monday or that Friday trade, but you had an opportunity to go long on Tuesdays. The market was actually below the entry price. On these mechanical systems, guys, if I miss the entry and I'm able to get a better price than the system, I usually take it. What I don't usually do is take a entry price worse than the system. Okay, like if I were to go long now, that would be worse than the original entry, right? Next. So next system we're going to move to are these reversion, not the reversion to mean, but these McClellan oscillator systems. So last Friday, the Dow version of the McClellan oscillator system took a long as that indicator closed below its lower Bollinger Bands. I have this McClellan oscillator systems on the S&P, the Dow, the triple Qs, and IWM small caps. Again, these are reversion to mean systems. Call them rubber band trades. You get too stretched, the rubber band will stretch back. These are, again, obviously reversion to mean system trades. They don't hold very long, sometimes just for a day. So that Dow system gave a pretty nice trade. It exited on that Tuesday. And yesterday, the triple Q McClellan oscillator system went long, and it exited today for yet another nice winning trade. Next. Image number 4 here. So here's the updated statistics. Profit factor on that triple Q McClellan oscillator system, about 8.9. Again, profit factor means roughly for every dollar it lost, it made $8.90. All right, 140 total trades now, 80.71% winning trades. And here's the system stats go back to 2008. So you can see the profit factors for those years, the number of trades for those years. You know, averages say 10 trades a year, roughly. 2014, there was only 3. Okay, some of these years were 15 and 18, whatever. Average is probably around 10. Okay, so that's a quick update on the systems. So the McClellan oscillator, triple Q system exited today for a quick winning trade. It went long yesterday. And the SPY reversion to mean systems went long on Friday, and both of those are still long. Next, let's go ahead and move on back to the general market. So here's the index sector table. And I already discussed this, but we'll look at it briefly here. So here's what happened today. Nice day for the major indexes, all closed positive, and all the indexes are now slightly up for the week. Okay, Dow, S&P, NASDAQ, Russell 2000, small caps. As far as the major market sectors here, the 21 of them, every single one was up today, so it was a broad-based rally. Okay, and for the week, most of them were up as well. There's about a handful that were still slightly down. Energy's had a nice week. Remember, I talked about this on Monday's newsletter. I said that energy to me looked favorable. Now, energy was down yesterday, guys. Okay. But hopefully you weren't scared out of that one down day, because today it's up higher than it was, after Monday's rally. So that's the thing, guys. If you're trading daily charts, you got to ignore some wiggle noise that occurs in the daily. As far as currencies, U.S. dollar slightly down for today, down for the week. And as far as cryptocurrencies, they're all slightly up today, slightly up for the week. Commodities, all to the upside here. Crude oil, 3%. Natural gas up 3.8%, continues to be on fire. Copper up 2%. Ags all up. The only thing down today was precious metals. Okay. Now, bonds, high yield corporate were up. That's a positive for the market. TLT 20-year bonds gave back a little bit of yesterday's gains, but still up for the week. Okay. Next. Item number 6 shows the economic news calendar. We had the CPI data come out on Tuesday, which came in not as hot as people were worried about, so the market liked that. Tomorrow, September 16th, we have retail sales, initial jobless claims, and of course natural gas inventories. And remember, options expiration is on Friday. Okay, let's go ahead and jump to the index charts. Just a second, guys. Okay. So let's go ahead and move to the index charts. The first chart here is the Dow. So the Dow broke down from this coil last week in 50-day moving average. It's a little choppy here, up today, still below its 9 EMA here. Again, guys, nothing has changed on this, right? Resistance is still right up here, the 50-day moving average and this broken trend line. So on a rally back to here, that is still potentially resistance, still an area where it could form a lower high, an area perhaps to short. Okay. Next, moving on to the S&P 500 charts. Here's the S&P simple daily chart I've been showing with the emphasis here on the 50-day moving averages in red. So, haven't quite tested the 50-day here yet. Again, we don't have to. The previous pullback in August, we did not, just got close to it. But you can see all year long, all these pullbacks have been very shallow, sometimes testing or undercutting the 50-day moving averages slightly, then reversing. The last 4 corrections have coincided with options expiration. You've had weakness up to options expiration and then strength and then new highs. Okay, all these. Options expiration, after options expiration, new high. After options expiration, new high. So are we going to see that again, or is the S&P going to say form a lower high? I still think that's a possibility, but for now we're holding this area. Okay. One thing I did point out today, it's kind of hard to see on this video. We do have a reverse divergence here, potential bullish situation where the stochastic's making a lower low, but we have a higher low in place. That's what you call a reverse or hidden divergence. All right. But again, so far, nice day, but like I said, it's still possible we could form a lower high here. Next. Chart 9, here's the 60-minute charts showing the NYSE tick pivots. So I've found that it's the NYSE tick indicator, whenever it spikes over 1,000, tends to, a lot of day traders use that as, a signal of, perhaps overbought or oversold for the market intraday. But I find that it sets up important psychological zones that are useful for more than one day. All right. So these are the prices where the NYSE tick indicator is spiked over 1,000. And again, a lot of these go back months. Okay. I used to have the dates listed here, but I took them off because the chart was kind of made it a little messy and they kept moving around. So, you can see we undercut this area here. We did, but didn't go down to this zone. That's, your big support, 44.15. There's 3 of them down there. So we didn't make it down to there. We had some MACD divergence set in place. And then we rallied nicely today. Okay. So far, we've been stalling around this 44.85 tick pivot. Okay. And then the next one is 44.92. Next. Chart 10, here's a traditional 60-minute chart. So like I said, we had divergence at the lows, MACD, RSI. And again, we had this open gap going back here to August 23rd, which was filled. Remember, these open gaps on the S&P cash are magnets, okay? So when we started selling off last week, and early this week, to me, that was a magnet, okay? So that was finally filled. So along with the, say, MACD divergence, that allowed us to go higher. We didn't make it to this next support zone at 44.30. Okay, so far we're bouncing. 4,500 is now resistance. So you can see the moving average ribbon here flipped to a bearish configuration back here. It pinched right here. That was a shorting opportunity. When the moving average ribbons first pinch, they first change direction and then pinch. That's a low risk trade right there. That's a shorting opportunity. Like here, for example, it flipped positive, so the first pinch was your buying opportunity right here, okay? So now the question is, you can see they're still bearishly stacked. Are they going to pinch under here and still, form a lower high? So that's still possible that price could form a lower high up in this area. So definitely, we're not out of the woods yet for the market, guys. Next. Chart 11, here's a 15-minute view. You can see that open gap that was filled We went a little bit lower. Here, again, it's a little messy, but I added fibs in purple. So the 50% fib retracement from the high to the recent lows is 44.90. The 61.8% fib is 45.03. So those are your next resistance zones to monitor should we push higher tomorrow. And finally, chart 12, here's the 5-minute view. Again, you can see today we started up positive. We formed intraday, a little ascending triangle here on the 5-minute, busted out of that. Then we formed a pennant in the afternoon and moved out of that. Next, let's move to the KISS charts. So chart 13, here's the daily KISS. So on Monday, I was saying watch this ATR here support. You can see we tested that on Tuesday, held it, and we bounced off of it today. So clearly that's an important area. No changes in the DVT, still 43.68, still pretty wide. Steve commented on this yesterday, and that was important. This, you can see, is definitely behaving differently than it did back here. Remember, this is the moving average ribbon with the BPTMA Deluxe, which changes slope with color with slope. You can see it's been red for 7 bars now, whereas the past times it was only red for 4 bars on all these major pullbacks. So this is definitely different behavior than we've seen back here. Okay, but for now we've held this ATR. Next, chart 14, here's the cycles. So like I said, the daily charts up here. Again, these are always very good guides. The amateur buying, you can see those occurred at highs. We've clearly pulled back from those highs. Trying to bounce off the ATR on the daily. On the half day right here, had a little DeMark 9, got quite overbought, or oversold, I mean. Little bounce. You can see on all these smaller time frames, the ATR is now your resistance. Here's the 60-minute, right? So also the moving average ribbons are bearishly stacked on these smaller time frames. So we'll be monitoring that. Now you can see today the half day bounced off the 60 stochastic bounced off this 50% area. Okay. The 120-minute had already broken it and its resistance. Next. Chart 15, here's the triple Qs daily. Again, bounced today off. Still trying to hold this 20-day moving average on a closing basis. That's what it's been doing. The 370s are major support. We haven't went down to there. Moving average ribbon starting to pinch a bit. So now we'll see, can this go to new highs again, or we form a lower high? Next. Chart 16, here's the 60-minute view. Last week I drew this umbrella top, and this played out for a quick sell-off. We get down into here. We didn't get down to these other major supports down to here. We bounced up on Tuesday, tested that trend line, which was previous support. That was a good shorting opportunity. Then we sold off, made a slight new low there. That new low had MACD divergence. So then we've rallied again, and we're now retesting this area. So are we going to fail here, or is it going to just bust through here and go back to the highs? We'll see. But this is still resistance. Next. Chart 17, here's the KISS chart. Again, same comments as Steve and I have been saying. The ATR didn't quite touch it like on the S&P, but that's your support. You can see the BPTMA has also been red for quite a while into the ribbon. Next. Chart 18, here's the cycles. So on the daily cycle, we see that. On the 195-minute chart, I'm not sure if Steve pointed it out or not, but you had a buy cycle that showed up yesterday. And lo and behold, that ended up being a nice bounce area. As you can see, it's bounced off the cycle buy. Okay. And by the way, that coincided with the McClellan oscillator system going long, which closed out today for a quick winning trade. We're below the ATR here, so like I said, you could still end up forming a lower high here. So still be aware of that. We're not out of the woods, guys. Here's the lower time frame. You can see we're below the ATRs here. 60 stochastics, testing the underside of 50% on these lower time frames. Next. Chart 19, IWM small caps. Nice bounce today. Still below its 90 EMA. Here I added some fibs. As you know, it's been in this big range for many months now. Next. Chapter 20, here's the weekly chart showing you how it's been in this big range pretty much all year since it topped out there in March. So that does it for the major indexes, guys. By the way, that ding was from TradeStation. It means the after hours cash market is closed at 8 p.m. Next, chapter 21, here's the VIX. Again, down today as you'd expect with the market being up. Again, the VIX has been giving really nice buy signals whenever it's been closing outside its upper Bollinger Bands and back inside. But right now, really, it's not very useful until we see some, close outside the bands or unless we see this correlation indicator spike down. Next, chapter 22, McClellan oscillator, Dow. I showed this the other night. Again, this obviously closed out, so nice bounce here. Next, chapter 23. Here's the updated view of this. Large cap advance decline by small cap advance decline. Next, moving to bonds, chapter 24, TLT 20-year bonds. This had a nice breakout yesterday from the coil. Gave a little back today, but still holding the broken down trend line. So this broken down trend line is now support. If you happen to be long this, your stop would be just below this trend line. Next, chapter 25, J&K high yield corporate bonds. HYG is the other ETF that's the same thing. This was up today. Again, this is still a positive for the market. The fact that high yield corporate continues to make new highs. Remember, this tends to be highly correlated with the market because it represents liquidity from the Fed and everything else. So if you want a positive thing for the market, this is what's it. Okay, we do have a divergence obviously setting up here, but still we haven't lost that 9 EMA there. Next, let's move to some market sectors. Here's that communications sector. It contains a lot of those FANG stocks. You can see today it bounced off its 50-day moving average. Next, chapter 27, XLK technology. Also keeping an eye on there. A little bounce today. Still in the overall same pattern. Next, chapter 28, transports. As you know, we've been following this. We've been following the coil, which busted down last week. Big sell-off yesterday, little bounce back today. Right, it's been downtrending since May. You can see where the moving average ribbon flipped to a bearish configuration back here in June. Next, chapter 29, XLF financials. Still, little bounce today right off the 50-day moving average there. There's also a big support here, so it's still trying to hang on to that area. Get a little double top back here. Next, chapter 30, biotech, a little bounce today. Again, as I stated the other day, I'd like to see it hold this area. This was a nice long area down here at this double bottom. It's stalled at resistance here at the trend line and 200-day moving average. Now with the moving average ribbon pinching here on the first pinch and this area, I want to see if it can form a higher low. Next, chapter 31, real estate ETF. Again, this had a nice power move out of this trend line. It's pulled back. It's still, for now, holding this trend line. I want to see if it can hold that or not. Next, chapter 32, XLE Energy. Nice breakout today. On my Monday newsletter, I talked about how, energy looked favorable to me. Well, then on Tuesday, it started off strong, then gave it back, right? Some of you may have bought some energy stocks on Tuesday. I did. But I stayed put because, again, one day doesn't change things, especially if you're looking at a daily chart here. So if you stayed put, you're rewarded, and now you're positive. So again, guys, I just want to reiterate, especially if you're trading a daily chart, try not to get stopped out of things on noise. Because if you bought yesterday and you sold for a loss, well, you wouldn't be happy as it all recovered today. So that's a nice move. I still like this area. Next, chapter 33, OIH, Oil Services ETF, still has this potential inverse head and shoulder look to it. Next, chapter 34, ERX, one of the leveraged ETFs. Again, guys, as far as Individual stocks, at this point, a lot of them look very similar. So I would probably just play the ETFs instead of trying to look at a bunch of individual stocks. Next. Chapter 35, we'll just look at a couple that I showed on Monday. ExxonMobil had this coil, which again failed yesterday, but then it recovered right today. Next. Chapter 36, Chevron, same deal. Now this one, I'd still like to see it take out this 50-day moving average. You can see that's your resistance. All right, let's move on to commodities. Chapter 37, DBC, commodity ETF. Big gap up. So again, all the commodities did well today. Obviously, this is off the highs, but you can see this is a broad-based representation of commodities. Remember, commodities have been in a bull market this year. I talked about that back in December 2020. I said my thought was that commodities have entered a new bull market. And we've all seen that with, food prices, right? And, just go to Home Depot, Lowe's, try to build a deck, try to buy any commodity related item, and you know what I'm talking about. Next. Chapter 38, here's the weekly view. So it appears that it could be, again, you can clearly see this 5-wave uptrend type pattern. I will say that it looks like it's working on some sort of 5th wave, which means that after this is complete, it may need a larger ABC type correction. You can see the MACD divergence. Remember my education, 5th wave patterns have MACD divergence. Again, this 5th wave pattern can extend, but for now it looks like it's working on some sort of wave 5. Next. Chapter 39, crude oil. Again, started breaking this downtrend channel on Monday, and it had a nice follow through today. Next. Chapter 40, natural gas just continues to power higher. This has had since April, it has just been relentless, and especially since August from this little area. $4 range, big move. And you can see why divergence isn't a sell signal. You had a little RSI divergence here. I left the line here because now that divergence is gone. Okay. Remember, divergence is not a sell signal. You need a trigger on your price, your candlestick action. You did not get it. It is obviously overbought here, right? But, is it a sell? Well, or a short? Let's take a look at some intraday time frames. So chart 41, UNG, that's one of the ETFs. I don't have natural gas futures. So let's take a look at a 60-minute time frame on that. Chart 42, here's the 60-minute chart. So while you have a sort of a parabolic uptrend here, what you don't have is MACD divergence. You see this? So whenever I don't see MACD divergence, that tells me that even though this is overbought on the daily, it could still continue higher. Now, if this had a nice MACD divergence, then I might be looking at it as a short. But right now I'm not because of the lack of MACD divergence. Next. Chart 43, copper. Bounced today. Again, you can see it's been respecting this downtrend line. That's clearly resistance. Again, guys, if commodities are in a bull market, the bullish view here is you've simply had a large ABC type correction, and eventually it's going to bust out of here and make new highs. Next. Chart 44, Joe, the coffee ETF, ETN. I haven't talked about this in a while. It's been consolidating nicely here. You had a nice run back here. It's setting up into sort of, could be a big coil, but something to monitor here. MACD is recycled back to 0. And this ETF can move pretty nicely, so it's a pretty good trader. Next. Chart 45, URA, uranium ETF. And again, my God, this thing just continues to go. So far, a little pullback yesterday, but man, it just cannot pull in. Up again today, 6.5%. I bought a bunch of position back here. I sold a bunch up here. I still own just a tiny bit, but I wish I didn't sell any because this thing just continues to run. Okay. Again, this is a great buying opportunity here because remember I said it was in a bull market, and in bull markets you look to buy pullbacks. Next. Chart 46, here's the weekly view again. So far up almost 9% for the week. Again, guys, this is why I bought this pullback aggressively back then. You had your start of your bull market here, breaking this multi-year downtrend line. And this was the largest pullback in the bull market, but it was a buy opportunity. Next. Chart 47, here's the 60-minute time frame. Now, there is a little MACD divergence setting up now. Like I said, it's very extended. So, if you wanted an aggressive short, you could monitor this for a trigger. You obviously want to see the MACD curl down here to confirm. Next. Chart 48, there's the monthly view. Again, textbook Stan Weinstein base 1 that it broke out. It's clearly in a stage 2 run-up. Next. Chart 49, Bitcoin so far held that area bouncing. I do think this could, my thoughts here, it's probably going to form a lower high here and then maybe come down again in a C. Next. Chart 50, Ethereum rallied out of this little pattern. I think the same thing. It's probably likely to form a lower high in here, but we'll see. Next. Chart 51, HUT, one of the digital currency stocks, down today. Remember, they had that secondary offering yesterday, so even though the chart looked good, that caused the sell-off. But I think it looks attractive in here, perhaps. We'll see what it does around the 20-day moving average. Next. Chart 52, US dollar ETF. Again, slightly down today. No changes in the overall big pattern. Next. Chart 53, gold, slightly down. Again, it's been very choppy lately, gold has. Here I added a little trend line of support. That's your resistance. Again, keep an eye on the ratio here. You want to see the stocks outperform. And they have been a little bit since here, but you want to continue to see that. Next. Chart 54, there's the weekly view. Again, probably the better, cleaner way to look at it. Major resistance here, major support here. Moving average ribbons are flat, pinched. Next. Chart 55, silver, again, stalled out at the 50-day moving average last week. So far, we got a higher low here, but we'll see if we can get another push up again. Silver's just been very choppy the last couple of years. Next. Chart 56, GDX daily. Tried to bounce today a little bit, but lost those gains. This is your major resistance. It's your major support. Next. Following up on a couple individual names, GSS, still in this coil. So I still am going to monitor this for a trade when we like these coil patterns. Next. Chart 58, FSM. It's a silver stock. Again, you have this higher low. Again, if you happen to be long a little bit of this, put a stop right here for a swing. Otherwise, you got your resistance here that it needs to clear. Next. Chart 59, IAG. I pointed this out on Monday. Again, it's had a nice move as well. I liked the fact that you had a nice divergence down here on the MACD. The ratio, if you look here, had curled up. So up today, but off the highs. This is one I own a little bit of still. If we get a pullback, though, and it forms a higher low on light volume, it could be a buying opportunity. Next. Chart 61, KL. This is the star. It's held up the best out of all of them. While most of these gold stocks, are just coming off lows. You can see this one is really held up. And you can see that on the ratio relative to gold. It's been trending up for a month. Broke out of this bull flag recently, still holding up very well. So I like this one for relative strength. If the whole group can improve on average, this one could really do well. All right, it's the leader. All right, finally, let's move to trade ideas, guys. So chart 61, Apple, we've been showing this sell off here. Steve drew this trend line support. It's trying to hold this. Now, this could end up being as a short if it ends up breaking this eventually. Like, let's say Apple were to rally up a little bit, form a lower high, then come down and break this. That would be something to point out. Again, Apple is a good bellwether for the market because it represents such a large percentage of the indexes. So you always want to keep an eye on what Apple is doing. Next. Chart 62, Microsoft, another bellwether. Broke this trend line. Honestly, this could be a breakout trade above here. It's amazing the strength of Microsoft. Next. Chart 63, Google, also very strong. Bounced off the 20-day moving average here. Again, these FANG stocks, large stocks, still look decent. And that bodes well for the market if these go to new highs. they're in solid uptrends. Moving on to our trade setups. So Charter 64, AAZZD, I haven't discussed this for a while. I told Steve I was going to stop, posting these really on the trade on the website. This is one of our long-term speculative fundamental plays. Again, there's quite a few of you that bought it, and as you know, it's had a nice recent few weeks here. It had a rounded bottom, and nice move today. There's been some recent good news. I think there's a webinar tomorrow. So as all this suggests here, guys, on these speculative stocks, if I do show them, it'll only be because the chart looks decent. If you trade it by the chart, trade it by the chart, okay? But if you're interested in a longer term hold, then you need to do your own diligence and stuff like that, okay? But otherwise, nice move here lately on AAZZD. Next. Charter 65, GSKY, following up on this puppy. Wild action. We had it as a tight coil. It gave a great long trade out of the coil. Steve talked about it last night, that if you still had some, you'd have been stopped out on this big down day, but you should have been stopped out as a profit. But you probably are not happy if you were stopped out, because then today gapped up 53%. Basically, they're being bought out. Again, guys, the proper thing to do was stop out of your shares yesterday, because you don't know if it's going to get bought out. Okay, we're trading the chart, so the proper thing to do was stop out yesterday. If you were still long shares, well, you got lucky with this gap today. But again, anyone should have been out of it with this big down move. You have to stay disciplined. Next. Charter 66, CTAS, another one. Gave a nice trade out of this pattern, but technically you should have been stopped out of this. And a good stop would have been below this black candle doji the other day. Next. Charter 67, SGMS, one of my coiled setups from Monday, triggered on Tuesday. Nice follow through today. I liked this pattern, so really good trade on this one so far. At this point, I'd take some profits and move my stop up at least to my entry. Next. Charter 68, SCPL, long idea from last week, following up on it. Really nice move. So if you triggered on this thing along over this downtrend line, where my initial stop would have been? Probably right here at this higher low. I would have moved it up to here, this low of this candle, and then obviously I'd be taking some nice profits now. That's how I like to trade. Next. Charter 69, ASML, long idea from August. Man, this thing just will not pull in, just continues to hold this 9 EMA, so just trail those stops up. Next. Charter 70, Texas Instruments. I showed this on the weekend and on Monday as one that was holding up, and you can see so far it just continues to higher. It has this large coil pattern, so this one is doing well. Next. Charter 70, zooming out. Here's the weekly chart. You can see the big coil. So profit or possible profit target on this, price target. Say take the height of the coil here, about 20 points, add it to here. So say roughly 215 could be a target. Measured move. Next. Charter 72, key, long idea from Monday. Triggered yesterday. If you bought it and stayed put, you're fine. And as it went back above here today. Pattern's kind of sloppy though. I would be apt to, not give this one a lot of room. Put it into other things that are working better. Next. Charter 73, CNK. Still holding up here. Here I added a measured move. Again, guys, so far it's the last couple days pullback is just noise. Pattern still looks okay. That's your major support, that higher low. Next. Charter 74, DCT. This has been a great trade out of this base. Broke out a couple weeks ago. Higher lows right here would be a place for a swing stop at this point. Next. Charter 75, Qualcomm. Ended up triggering nicely for a short. Remember, this is a coiled setup by us. Nice move there today. Next. Charter 76, EMR, one of our short ideas from early last week, obviously played out fully. So, again, guys, if you shorted this back here, you should have taken some ample profits by this point. Next. Chart 77, BYND, little horizontal breakdown short. It's filled this gap, so that was one initial target. So hope you take some profits there. You know, again, just mind the market, guys. This is a profitable trade here, but if the market were to rally back to new highs, this could come back. Just a small breakdown so far. Next. Chart 78, Cron, another short that it played out. Horizontal breakdown. This is your resistance right now. Previous support is resistance. Next. Chart 79, Costco. Broke that little tight wedge, but still holding that 20-day, which I talked about would be support. Next. Chart 80, Snap. So coil that broke down for a quick short. Now it's back testing the trend line. Okay. That's resistance. Next. Chart 81, Tilray, broke down for a short the other day, bouncing back a little bit. This is now your resistance. Next. Chart 82, APPS, been on the watch list for a while. This is still a valid long setup to monitor. This could be a target up here. 75. Next. Chart 83, ONEM, it's been on the list since Monday. Still, you can see it poked over that resistance on Tuesday. This still looks okay, guys. See the moving average ribbon starting to pinch. Next. Chart 84, CM. Steve added as a short yesterday. This could go either way now. It could, if it breaks through here, it could be a long. If it reverses down and breaks this lower trend line, it could be a short. So this is an either or play. Next. Chart 85, HEES. I redrew this pattern. Tight coil developing. Again, either way, long or short. Next. Chart 86, KPLT. Still a valid setup here. It's coiling. I like the volume. Next. Chart 87, OSTK. Still potential short if it were to lose this area. Initial stop would be right here, the high of yesterday's candle. Next. Chart 88, NCMI, long idea from Monday. Still valid, guys. Still trying to base here. Volume patterns are still okay. If it can take this resistance out, I'd be interested in a long with a stop, say, right here. Next. Chart 89, SGNX, one from Monday and yesterday. Still valid as a potential long. Next. Chart 90, PAG. Here's a newer one. I like this pattern. Potential cup and handle. Volume looks good. Next. Chart 91, FCX. It's a copper stock. If copper rallies up, well, that could do well. You can see it's a tight coil trying to break out. Looks decent. Next. Chart 92. Here's a more of a new issue play. Got a trend line resistance right here. Next. Chart 93, HOMB. Big volume move up today. Broke this trend line. Got a resistance right here. This is one I'd watch tomorrow for possible momentum if it can take out this high. Next. Chart 94, ADS. Here's a new one. Coiling action. Good volume. Again, you know, long over this area. Stop right here. Next. Chart 95, SUNL. Basing pattern. Horizontal rectangle. Next. Chart 96, CGNT, horizontal rectangle pattern. More of a bullish setup at this point. If it could take out this resistance area. Next. Chart 97, BHG. Resistance trend line right here for potential trade. Next. Chart 98, in the last chart, APR, long idea over this area. So guys, we'll see what happens tomorrow and on Friday. And again, be on the lookout for email in the SPY system should the market push up a little bit higher. One of those may close out. That does it. Enjoy the rest of your night. See you tomorrow. Take care.